Moving on with our project, Binary Options Academy here on fairbinaryoptions.com. And what I would like to do is to, here on the second part on central banks and monetary policy, to explain a bit what these guys are doing with these meetings, and what is the purpose, and of course what is the reasoning for looking at these statements. Now, all the news that you are seeing here on the economic calendar, these are the news for next week to come, starting with the 4th of May on Monday, on Sunday tomorrow. But also these are last week. So all these news that you see here, the preliminary GDP, or the consumer confidence, or the German import prices, and so on and so forth, they are all used by traders only to have an educated guess about what the central banks are going to do when they are coming to meet next time. In order of their importance, after the cash rate, like it is here in Australia, is being called cash rate. Well, basically it's the central bank meeting each month to establish the monetary policy statement or the monetary policy, and to let's say to analyze the economy for the previous month. And they are all looking first at the CPI, or inflation. Now, if you go and look back on the inflation with the in Australia, and you are seeing that the inflation in Australia actually has been quite weak, and I would say that this will put some pressure on the Reserve Bank of Australia this next week. Usually, after the central bank meeting, you'll have a press conference, but that is not mandatory. For example, in the United States, the Federal Reserve is meeting every 6 months and establishes the monetary policy. What they do is look for 6 weeks. Sorry, they are looking for the past 6 weeks and analyzing the markets. What are the conditions in the economy, if inflation picks up, or there are lower levels of inflation to be expected, and so on. The committee is being called FOMC in the United States, so the Federal Open Market Committee. And based on the information that they have, they are going to come and issue a statement. They are going to increase or decrease the interest rates. Higher interest rates are calling for strengthening of a currency, and therefore we should look and buy call options based on that currency. Lower interest rates are calling for a weaker currency. On the economic calendar here, on the left side, you have the central bank rates, and as you can see, we are talking about 3% in New Zealand, 2.5% in Australia, 1% Canada, 0.5% in UK, 0.25 in Europe, and less than 0.25 in Switzerland, less than 0.25 in the United States, and almost 0 in Japan. So I would say that interest rates are showing the difference between the strength of different currencies, and also you should be aware that currency pairs are moving based on interest rate differential, it is being said. So it is no wonder that New Zealand dollar is at the highs. It is no wonder that US dollar is at the lows. It is no wonder that the Japanese yen is at the lows, as the interest rate, or everybody wants to own a currency that pays bigger interest rate. Thank you very much for being here. Second part here on fairbinaryoptions.com, central banks and monetary policy. Bye bye.